Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. Today we are diving into a report from the Federal Home Loan Bank of Topeka. This might sound like a snooze fest, but trust me, understanding how these banks work is key to understanding the whole financial system. So stick around to find out how these banks are handling things. We're looking at what's called an 8K form, which is basically a corporate breaking news report. Companies use it to tell the Securities and Exchange Commission, the SEC, about major events that could affect their investors. In this case, it's about some new debt that the Federal Home Loan Bank of Topeka is taking on. This report is dated April 7, 2025, so this is pretty fresh information we're looking at. The Federal Home Loan Bank of Topeka, that's the exact name of the company. It's a federally chartered corporation, meaning it gets its power from the government. They're located in Topeka, Kansas, with a phone number you definitely don't need to memorize. Now let's get to the interesting part. This 8K is all about something called the creation of a direct financial obligation. In plain English, it means they're taking on debt. They are borrowing money. The Federal Home Loan Bank of Topeka, or FHLBank, gets most of its money by selling debt securities, which are basically IOUs in the capital markets. These IOUs are called consolidated obligations, and they come in two flavors, bonds and discount notes. Think of bonds as regular loans where you get interest payments, and discount notes as loans where you buy them for less than they're worth and get the full amount back later. These consolidated obligations are not just the responsibility of the Topeka Bank, but also the other 10 federal home loan banks. They're all in it together. If one bank can't pay, the others have to chip in. The government doesn't guarantee these debts. The money to pay back these loans comes from the financial resources of all 11 federal home loan banks. Now let's get into the numbers. Schedule A is where all the details of these new debts are laid out. This schedule shows all the consolidated obligation bonds and discount notes that the federal home loan banks have committed to issue, where the FHLBank of Topeka is the main borrower. There are a few things to keep in mind when looking at this schedule. First, even though these debts are important to the FHLBank, they are not judging if any particular debt is crucial. Second, this schedule doesn't include any interest rate exchange agreements, which are ways they might try to manage their risk on these loans. Third, this schedule doesn't give you a complete picture of all the debt they have because it doesn't include discount notes with a maturity of 1 year or less, or show if they are using the money from these new debts to pay off old debts. And finally, the amounts listed are the face value of the debts, which might not be the same as what they actually report on their financial statements. Alright, let's dive into Schedule A and see what we can find. The table contains trades that occurred in early April. On April 7, 2025, they made a few deals to issue bonds. The first one, CQS IP 330 HATS 57, settles on April 9, 2025, and matures on March 10, 2028. It's a non-callable bond, meaning they can't pay it off early, and it pays a fixed interest rate of 4.5%. The bank par or face value is $400,000, so not an enormous bond, except $1,000. So not an enormous bond. There are two more very similar bonds with almost the same terms. Then there's another one, CQS 430B, 5 UMATEs settling mid-April and maturing mid-September. This one is a variable rate, so the interest rate can change. The bank par is $300 million, so much bigger this time. There's also another bond issued on April 7, but doesn't mature until 2040. It has a optional principal redemption. This means they can pay it off earlier if they want. This is also a fixed rate bond paying 5.62% with a bank par of $10 million. One last bond was transacted on April 8 with $240 million in bank par value. The filing clarifies some of the jargon used in the schedule. For example, optional principal redemption means the FHLBank can choose to pay back the bond early on certain dates. Indexed amortizing notes means the principal repayment is tied to an index, and scheduled amortizing notes means the principal is repaid according to a set schedule. They also explain the different types of call styles, such as American, Bermudan, and European, which describe when the FHLBank can redeem the bonds. Finally, they describe the different rate types, such as fixed, variable, and conversion bonds, and the different rate subtypes, such as American, Bermudan, and European, which describe when the FHLBank can redeem the bonds. Finally, they describe the different rate types, such as fixed, variable, and conversion bonds, and the different rate subtypes, such as constant step-up and capped floater bonds. Now, what does all of this mean? The Federal Home Loan Bank of Topeka is basically borrowing a lot of money. They're issuing bonds with different terms, some with fixed interest rates, some with variable rates, and some that they can pay off early. Overall, it seems like the Federal Home Loan Bank of Topeka is managing its debt in a pretty standard way. They are issuing different types of bonds with different maturities and interest rates to meet their funding needs. The risks here are similar to those of any financial institution that borrows money. If interest rates rise, it will cost them more to borrow. And if the economy weakens, it could be harder for their members to repay their loans, which could affect the FHLBank's ability to repay its own debts. However, these federal home loan banks are a key part of the US financial system. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.